it's Candus, creator of Confidence with QuickBooks, and in today's QuickBooks tips and tricks, I want to teach you about depreciation. So year end is coming, and a lot of times people want to know, how do you enter the transactions you get from your accountant into your QuickBooks so that they match? So come look over my shoulder and I will teach you how. Okay, so the first step is to go into your chart of accounts, and the way you get there is list chart of accounts. So what QuickBooks, or what we really recommend doing, is having a main account called vehicles and then creating a sub account called whatever your vehicle is. So if you bought a Toyota Tundra, it would be there. And then what we're going to do is we're going to actually put depreciation below that. So we're going to go down to add new. So what the accumulated depreciation is, it's a contra account. So what it does is it's basically deducting it directly from that category. So we're going to create a fixed asset and we're going to call it accumulated depreciation. And the reason that we do it below your vehicle is because what you want it to do is you want it to take away from the value of the Toyota Tundra. So when you go in, you're going to put in your depreciation. The other side of it's going to be accumulated depreciation, and it will actually let you know, it'll start removing it from the value of the vehicle that you've added. So then we're going to add one more new one. This one is going to be an expense account. And this is going to be depreciation expense. And you're going to save and close it. So now you have depreciation expense and you have accumulated depreciation. So that's how it works. What you could also do below is you could have Toyota Tundra, and then you could have original cost or original purchase amount, and then the depreciation. Either way you can do it, doesn't matter. Then what you're going to do is at the end of the year, your tax professional is going to give you the depreciation. You're going to go under company, make general journal entries. You would pick the date that it was for. Usually it's going to be the last day of the month or of the year, month and year, I guess you could say. And you're going to go down and you're going to pick depreciation expense, which there was technically one already in there. I spelled them slightly different. That's why. Let me make sure I got the right one. Okay, so to get rid of that other one, let's go in and fix it real quick. Because I don't like it when I have too many of the same thing. So here's the other one. Sorry, that's my earring. You hear maybe making a little bit of noise. So I'm going to merge these two real quick just so that I don't mess you up. I could technically delete this part, but hey, get a little extra. So I just make them spelled the same. Save and close. It will merge them. Now they're just one. Okay, we'll go back into depreciation. Expense and say that it was $1,000. I'm just putting an example in. Put a memo, your depreciation expense for, and all that kind of stuff that your tax professional will give you, and then your accumulated depreciation on that vehicle. And then if you hit save and close, what you'll see happen is that now when you go to your chart of accounts, you will see it now shows your actual value of that Toyota Tundra is only $14,000, but $1,000 is what's been written off under depreciation. Okay, so that's how depreciation works. That was a question that I received. If this tip has been beneficial, please share it. And don't forget to subscribe to this channel so that you get all of my tips and tricks. I will see you guys next week. Have an amazing day. Take care.